right, both streams should be up and running here. We got about a minute until the market closes. We'll be going over the market and today's trades. All right, so we should be up and running on both platforms here. So let's go ahead and get started. Good afternoon. This is Ifan from the Strategic Day Trader, and this is your market wrap for April 7th, 2021. Q's up about 0.24 and SPY up about 0.12. Doesn't really mean much, I think, today. They aren't really up anything. And then today you can see it's just been a lot of sideways price action, a lot of choppiness here, okay, on the Q's and SPY. So coming into today, we were bullish, but didn't think it was a good time to initiate new longs, really watching to see what kind of pullback we get here, which we don't really have to pull back. The more that we base up here, the more bullish. So overall bullish, we're just extended on the Qs and SPY. So wouldn't be surprised if we get a small gap down, if we get a little bit of a pullback, expecting those to be buyable opportunities, okay? So expecting that pullbacks should be buyable. Okay, so same thing. I mean, yesterday we had a pretty narrow range day. Today another narrow range day, and so you know, kind of what we said on Monday still rings true going into tomorrow, right? Not so we're bullish overall, but would like to see a pullback first, initiating new positions up here. A little bit aggressive because of how extended the Qs and the SPY are. Okay. All right, let's get into today's plays, which I thought today we had two really good gap downs, FGen and Geo, both of which were called in the room. Sammy called the Geo, I called the FGen. All right, so both the favorites here did end up giving us entry patterns and giving us some follow through. Okay, let's go ahead and go over the FGen. All right, so FGen was a pro gap down. It is coming from the 20 MA here, so that is going to make it a pro gap down. Now we did have a gap down in March, and the March gap down didn't really do too much. Looks like I tried to break down, but didn't follow through either. What I liked about this FGen gap is that you can see kind of the damage it's doing to the larger time frame charts here on the weekly, breaking some significant support there. Now, I do think the gap was too big. That was the one major flaw that I had with this FGen, but everything else I was fine with. It's not novice long term. It's definitely not novice short term, definitely a professional gap, so there's some shock value here. It's definitely clearing the support there. Definitely gapping down more than the market. Market wasn't really gapping, right? So, you know, like a tier 2 gap on the FGen, okay? So, you know, I wasn't really looking to play it aggressively at the open, although... yeah, as a 1 minute high-low, it's okay. There's a little bit of tails on either side, but pretty aggressive to just do like as a 1 minute high-low here. Okay, what we did end up playing this as is a breakdown right here. Okay, so as a breakdown here. Okay, as a 1 minute base breakdown. 2 minute, not perfect, but resembles a 1, 2, 3 here. Here's the 1. Then you get sort of an inside bar. Did break the initial bar by a little bit, so it's not quite perfect. 1, 2, 3, and then 4 triggers there. Okay, so it's a 1, 2, 3, 4. We did have to live through a bit of a pullback. I did use the big stop because I was kind of going off of the 2 minute 1, 2, 3 there. So the stop was all the way up here, above 23.14. So it was above there. So, you know, it didn't go right away, but eventually got going here. And we were looking for 21 just as the first target because we didn't really have much of a reference point. And once we got into that 21 area, we did see a little bit of volume increase as well. So that was the first target. We did hold some here, and basically just until the end of the day, we went 1 minute bar by bar. We didn't get those last, whatever, 20 cents, but trailed out right there on the last bit there on the FGen. Now, what we did have today also in the Qs was FOMC. Okay, FOMC, you can see kind of the reaction that took place here, right in here. Okay, a little bit of a bounce, and then that bounce to get sold. Now, when I'm in a play and FOMC is coming up, I primarily want to be cautious of getting triggered into something, right? So like something like the SQ is probably going to be a little bit market related. Like if this pops, this may trigger you in. Like this is a pretty okay base breakout. What I don't like is the daily location here right into that pivot there. So it is into resistance. So, but what I don't want to do is get triggered in because the FOMC pop, and then when the FOMC gets sold or the initial news gets sold, that this gets sold too. Okay. So when we have FOMC, that's the first thing, is I don't want to get triggered into the play kind of accidentally or just due to the market. But if I'm already in a play like the FGen, I don't do anything different with this. I don't manage it. I don't go tighter. I don't really need to. This, I'm playing this with the expectation it's on its own page. Okay. And so it's not going to care too much about the market. Okay. So there wasn't any change. We trailed this like hourly bar by bar, just like we would any trade, whether it was FOMC or not. Okay. Because I'm going to look at the volume on this, right? This is doing its own thing. This doesn't care about the market. You know, big gap down. Market wasn't really moving. You know, market initially moved up in the morning, and this didn't participate at all. So I'm assuming this is on its own page. And so when that's the case, I don't, you know, react or change anything. Is it possible that some, you know, news events like that will eventually kind of put the bottom in on the FGen? Yeah, of course, it could happen. But for the most part, I've just generally found I don't need to do anything different, you know, for these, especially if it's a gap play, if it's big, you know, big volume, it's already trending, relative weakness or extreme relative strength, whatever, right? I don't need to do anything different. So we just stuck with it. And so you can see the same goes for the Geo from Sammy, right? You know, maybe you get a little bit of a move up here, but this never started uptrending and then still closed at the lows here, right, on the Geo. So Geo's nice, breaking support, nice gap down, right? We're expecting that this is on its own page, right? So when it comes to FOMC, the main thing is I don't want to get triggered into plays just due to like a market pop or market drop. Could be a drop as well if market reacts negatively, right? So around that time, I'm basically just not going to take any new entries. But if I'm in a play and I've been in it for hours like the FGen, then just let it play out, okay? Because typically, and I've had this, you know, because we get these, whatever, every month. So it's not uncommon for me to already be in a play from the morning and have these happen. And what I found is that I don't really need to do anything with these. You know, I already have a trail anyway. We've been lowering the trail on the hourly here. And if it trails because of FOMC, that's fine. But what I found is that you pretty much can just let it play out. Okay. All right. Hope you did well today. I thought that, you know, like I've been saying for the last few weeks, quality over quantity. Like I said, these were the two favorites that we gave you in the pre-market. These were the two that ended up being official plays today. So, you know, those are the favorites. Those end up being the plays. You know, I'm going to continue to take the same approach. It needs to be a good gap. It needs to be doing something impactful on the daily. Now, we looked at some long examples the last couple of weeks, right, of things clearing on the daily. And now, you know, today we played a couple that were clearing on the daily to the downside, clearing support as opposed to clearing resistance. Okay. So I don't have a preference for one or the other. Just needs to be something eventful and potential to move. Okay. All right. That's going to do it for today's market wrap. Hope you did well. We'll be back at it tomorrow.